早晨各位同事
Good morning, members. Happy Easter. We have a quorum. I call the meeting to order. This is the panel on financial affairs meeting. Item number 1, confirmation of minutes of meeting, and we have circulated to members through paper CB bracket 1727/7/18 the minutes of meeting on the 5th of January 2018. The Secretariat has not received any proposals for amendments. If there are no problems, I ask members to confirm this minutes. Information papers issued since the meeting on the 5th of March 2018. There is one. You find the information on the agenda. Date of next meeting and items for discussion. It will be the regular meeting in May. There is a change. It will take place on the 15th of May at 10 o'clock. I repeat, 15th of May, which is a Tuesday at 10 a.m. Because there are overseas visits of by government officials, that's why there is a change. There are a number of items. First, briefing on the work of the Hong Kong MA. 2, annual briefing on the work of the Financial Reporting Council. And proposed amendments to the Securities and Futures Professional Investors rules. So in relation to these items for discussion in the May meeting, would you like to add or delete anything? If you have any opinion, please let me know or inform the clerk. Next item, development of financial technologies. I ask the administration to come in to join us. Yes?
冇啊，暫時兩位舉手。你講，你想講，你問呢個金融科技。金融科技啊，張華峰副主席。早晨各位同事，早晨。
Good morning. Let me give a brief introduction. You all know Mr. Andrew Wong. In the middle, at the front, Mr. Chi Wang-te from the FSTP. In the front row, Mr. Charles Dorsey, Invest Hong Kong Head of FinTech. The row behind, from the left, Mr. Nelson Charles, Chief FinTech Officer from the Hong Kong MA. Next to him is Ms. Julia Leung from the Securities and Futures Commission. Next to her is Mr. Tony Chan from the Insurance Authority. And then is Dr. Toa Cham from the Hong Kong Cyberport Management Company Limited. I ask the administration to give us a brief presentation using a PowerPoint. Perhaps I will say a few words before I hand over to my colleagues. We have a PowerPoint presentation. This is about the various efforts we have put in by the government, financial regulators, innovation partners, and industry players over the years in relation to development of fintech. In relation to the cyberport community, about a year ago there were about 180 companies. This year it has jumped to 250 companies. It is the largest fintech community in Hong Kong. And in relation to world-renowned innovation laboratories and accelerator programs, we see a number of them coming to Hong Kong. In relation to financial institutions, they have been actively using fintech to enhance customer experience as well as efficiency. Between 2014 and 2017, as you can see on the screen, well, when it comes to the accumulated investment by fintech companies, it has reached $940 million US compared to nearby places, we have done better. We have used a five-pronged approach to facilitate fintech development. That is, promotion, facilitation, regulation, talents, and funding. In relation to promotion, for Invest Hong Kong, there is a dedicated fintech team who is putting in a lot of effort to attract fintech startups, innovation laboratories to come to Hong Kong. And regulators have been doing their work locally as well as overseas. Cyberport, they have been supporting collaboration and giving guidance to startups as well as the application of fintech. Regulations. Well, there are supervisory sandboxes to promote the use of fintech as well as to enhance exchange with other financial institutions. When it comes to training, well, we will provide internship opportunities. We will also try to attract overseas and mainland talents to come to Hong Kong. When it comes to fundings for public and private sectors, we have provided a series of funding support for startups at different stages. I will ask Invest Hong Kong as well as Cyberport to briefly go over their work. Charles, would you please start?
Mr. Dorsey.
Chairman, members, good morning. We've been working very actively with companies from overseas to help them with the different topics they want to cover on the fintech, and we are very happy to see the progress we are making with an increase of 153% of funding for Hong Kong fintech over the year of 2017. So it starts to show some momentum and support for the overall ecosystem. Invest Hong Kong fintech team is distributed between Hong Kong, London, and San Francisco, and we've been assisting about 250 fintech companies over last year, and we see this number keep increasing. The Invest Hong Kong fintech team has been also very active in supporting the rise of numbers of accelerators in Hong Kong, and we will be opening this year our 5th fintech accelerator in Hong Kong, which will be also one of the first Asia fintech regulation tech accelerator. We are also working with incumbents and large financial services companies to keep increasing the numbers of services and insurance innovation lab in Hong Kong. The FinTech Week is one of our landmark events. We spend a lot of time and energy on this, and we want to keep, I would say, raising the profile of the Hong Kong FinTech ecosystem all over the world. 2017 have seen an increase and growth of size of the FinTech Week, moving from 2,500 participants to 4,000. We increase also the numbers and the reach of the event in terms of countries participating, as well as speakers. And we notice also a very strong appetite from the media around this event, growing to about 320 media coverage of the event. We also worked with the team at keep connecting and growing the network of partners for the fintech ecosystem in Hong Kong, and we had a working session with 7 other fintech hubs to exchange notes and see how we can keep cooperating in the coming years. In terms of promotion, we are very active in Hong Kong events as well as European, US and mainland events, and you can see here a few numbers of the events we've been sponsoring or participating actively. The big, I would say, partners for us will be Finovate Asia, which is a global fintech startup pitch competition, having also a stop here in Hong Kong during the FinTech Week, as well as the FinTech Finals, which are organized in different countries, and the finals happening here in Hong Kong early in the year. Thank you.
Thank you. Who's next?
Dr.
Cham.
In relation to Cyberport, we support fintech on 2 areas. First, for startups as well as for the sector. In relation to startups, there are a number of initiatives to support startups. First of all, there is the Cyberport Incubation Program. Last year, there were 77 fintech startups joining the program. You might have heard of TNG, Bon IT, and Claire AI. The second one is the Creative Micro Fund. In the past 2 years, we have supported 66 local fintech projects.
The third program is in relation to university students. We have launched the Cyberport University Partnership Program. In the past few years, we have trained up 160 university students. They participated in the entrepreneurship boot camp in the Graduate School of Stanford. Now, apart from the 3 specific programs mentioned just now, in terms of hardware, we have also provided a smart space fintech, which are dedicated for collaboration and co-working by the fintech startups. It provides over 47,000 square feet, and 128 fintech companies have moved into the space. So this is the largest ecosystem for fintechs in Hong Kong. And together with the Hong Kong MA, we launched the Accelerator program. So startups and fintech companies are pulled together to take part in hackathons so that the 2 types of companies can collaborate more and train up more talent. Now, in terms of the sector, we are providing a lot of support. We participated in a number of forums and conferences. For example, in last year, we organized a delegation to London so that sectors of both places can have exchanges. And we fully cooperate with Hong Kong MA. We want to do more in the Bay Area, and particularly in Shenzhen, we want to work together with authorities there. So last year, we extended our MOU to explore the feasibility of developing fintech in Shenzhen. And the last but not least, in relation to blockchain, we are grooming talents and promoting blockchain. So who else? HKMA, please. Good morning, Chairman. In the past 2 years, fintech has developed rapidly in Hong Kong. So to help banks to capitalize on opportunities, in September last year, we launched 7 smart banking initiatives to help banks to upgrade their services. Number 1, faster payment system. This will enable Hong Kong public to use their smartphones and emails to transfer payments in Hong Kong dollar or RMB in their SVF accounts. And it will be launched in September 2018, and we're now trying it out. Now, as for FinTech Supervisory Sandbox, that was launched in September 2016, and in a risk-controlled environment, banks can try out their different products. As of end of February, 29 technology products are being tried and 19 products have been rolled out. And some fintech companies have told us that they have to partner with banks before they could use the supervisory sandbox. Sorry, Mr. Chow, can you please speed up, because a lot of members would like to ask questions, because for these 7 smart banking initiatives, they have been discussed here. So can you speed up your presentation a bit? Yes, that's all right. That can be done. Now, after we've launched 2.0 version, we have rolled out 19 products. Promotion of virtual banking. In mid-March, we have collected views through a public consultation. In May, virtual banking applications will be accepted. Make banking made easy. This is the 4th program. We have looked at our regulatory requirements to see whether banks can work with the tech sector. So these are the 3 programs talked about: remote onboarding, online finance, online wealth management. And Open Application Program Interface, we have ended the consultation on 15th of March, and we're now dealing with the comments. Cross-border fintech cooperation, we are working with Shenzhen and also other places, and we signed MOU. And the last one is research and talent development. Now, in terms of blockchain, we have issued 2 white papers. In talent grooming, we will also be working with different universities to provide training programs. And the last program is to continue to liaise with the industry to see what kind of enhancements can be made. Julia, please. 2 minutes, please. Complete your presentation in 2 minutes. Julia, I'll be very quick. The SFC, in terms of fintech, we have 3 types of work. And one is to enhance fintech companies' participation in intermediary services. We have set up contact points and have set up a fintech advisory group. And we have also signed an MOU with the country's supervisory body. Second policy is enforcement and policy. Our policy objective is that intermediary companies can better make use of fintech. So we would try to remove certain obstacles or hurdles in our regulations, and we would try to minimize the risk of using such fintech. Last week, we have published a consultation paper on the proposed guidelines on online distribution and advisory platforms to consult the industry on how best to sell products, complicated and simple alike, online. And we have also launched the regulatory sandbox, and we have tried to issue the guidelines to reduce, mitigate hacking risk associated with internet trading. Now, enforcement. You may have noticed that fintech blockchain companies may issue digital tokens or ICO initial coin offerings. This is crowdfunding online, and this is not regulated at all. And in September last year, we have issued many warnings to the public to alert them the fact that this digital or initial coin may be classified as securities, and if they don't get a license, issuing such coins may be a breach of the ordinance. And in September and February and March, we have issued circulars. And we have also issued warnings to ICO issuers. And these actions have served as some deterrent effect. And some ICO issuers have stopped their issuance of such coins. And also in collaboration with the investor education sector and the FSTB, we have done a lot of education work. Insurance Authority, one of our functions is to facilitate the sustainable market development and promote the competitiveness of the insurance industry. So we want to encourage and facilitate the use of InsurTech by the insurance industry and provide a business-friendly environment for the use of InsurTech. We hope that the insurers can make better use of fintech to enhance policyholders' experience, project positive image of the industry, promote efficiency and competitiveness of the industry, and encourage the offer of innovative products and services to spur the development of the insurance industry. In terms of regulation, there is no regulatory hurdle for insurance companies to apply InsurTech. In fact, insurance companies have already been applying InsurTech in their operations. Some examples include telematics, offering premium rebates based on certain criteria of driving behavior. And also, insurance companies can also establish digital insurance platforms. Through such platforms, they can assist customers in finding the suitable products. For the IA in July, last year, we have launched the InsurTech Sandbox. We want to provide safe space in which insurers can experience with new ideas. And in our sandbox applications, there are products like telematics for fleet to monitor the driving behavior of the drivers. And there are also wearables for monitoring health of the insured. And some insurers are also working together with the SVF operators to help them with premium payments. In September last year, we have also encouraged insurers to use a fast track for application for authorization of new insurers owning and operating solely digital distribution channels. We have also set up an InsurTech facilitation team to work together with stakeholders, including fintech companies. We hope to enable them to understand better our regulatory requirements. And also we have signed fintech cooperation agreements with other jurisdictions for international cooperation and information sharing on fintech. Thank you, Mr. Chen. 5 members are in the queue. Jeffrey Lam, Ronnie Chang, Christopher Zhang, Charles Mock, and Wu Ji-wai. And Chen Kim-po, 4 minutes. Mr. Jeffrey Lam first. The PS said that the government will promote fintech through 5 channels. I agree with this approach. You've been doing fine with promotion, but in terms of support, facilitation, regulation, talents, and funding, especially talents, I'm not sure how well you are doing. How are you going to attract talents? We must have a market before we can attract talents. But talents do have their own requirements before they come to Hong Kong. So have you conducted more studies on this? And maybe across different government departments, you should do something. Say, for example, if overseas talents would like to come to Hong Kong, they may have a need for international school places for their children, and they may have other living needs, and you have to meet with those as well. And in terms of regulation, I think it's you should go by a stringent approach. The government has been advocating for a single window approach, but a lot of overseas companies getting listed in Hong Kong have complained to me that you've asked for all sorts of documents from them. Now, today we are discussing about fintech, and you are asking them for the original copies of their graduation certificates and so on. So you said that you must give us the original copies. How can you digitalize things? Now, this is what's happening every day in Hong Kong. So if you look at other jurisdictions, they come with more flexibility. The Hong Kong government has been asking for originals of documents all the time. So PS, please look into that. And the HKMA talk about the faster payment system. What is your target? What is the ratio? What is your target ratio of that? The HKMA said that you would look into the possibility of using e-wallets to pay government bills. And you are now studying into the issue. Can you share with us the difficulties and the problems you identify in your study? PS, please. I will first tackle the several questions, and I'll defer to Nelson to talk about the faster payment system. Now, talents. First, we encourage that we should groom local talents. So for universities in Hong Kong, there are 2 universities which have launched fintech programs, formal programs. Now, for overseas talents, we said that through cyberport programs, through Invest Hong Kong, startups are encouraged to come to Hong Kong. So they will come with talents. When they come to Hong Kong, how can they how can they establish a presence in Hong Kong? The Invest Hong Kong has come up with a very good system to help these overseas companies. Now, as for Cyberport, there are different funding programs like microfund and so on, as mentioned by Dr. Cham. So if these talents come to Hong Kong and would like to start their new fintech business. All these programs are there to help them. Now, as for regulation, I understand what the member has mentioned. We are asking for different documents under different regulatory approaches, but for us under the Future Smart City initiative, we will launch something to help out. And the HKMA, I know that it is talking with KYC, with banks, on how to help banks in that regard. As for whether the government can make better use of fintech, for example, using e-wallets and so on. We are now working very hard with other government departments to try that out.
But it very often involves system enhancement, so we have to look at that timetable. But the administration's stance is very clear. We encourage departments to promote the use of e-wallets. I'll defer to Nelson now. Mr. Chow, when it comes to the platform of faster payment system, it applies to all store value facilities as well as banks. Of course, banks as well as operators will have to accommodate as well. At first, there will be 20 banks as well as 8 SVF operators that will participate. We believe that there will be more participating later. Next, Mr. Ronick Chen. I see that when it comes to anything under the purview of the FSTB, well, I do think that when it comes to fintech, the ITB is very active. I do see that the number of cumulative investments in Hong Kong is $940 million, which is much higher than Australia and Singapore. But has the administration done any survey or estimate as to the value produced by such investment? If you haven't done so, you may need to consider doing it in the future. And I would like to ask questions about a fintech of the Hong Kong MA. You say that the fast payment system, there will be the promotion of a common QR code for retail payment. And you are talking to the sector to explore its feasibilities. What is the progress? I would like to use, well, will it be common with the one used by the mainland as well? Because, well, we talk about integration with Bay Area. If there is no common standard between Hong Kong and the mainland, there will be a problem. And I would like to ask about Open API. You have talked to us about one of your initiatives. I have read from a recent press report that there is a local fintech startup that has developed a mobile app which allows customers to, via this app, log on to accounts of different banks, and there will be functions of financial analysis. I believe that there will be more such apps in the future. We encourage the development of fintech, but how do you ensure the protection of people's property as well as privacy? These are my questions. Let's hear first from the PS. I will for the first question, and then I'll defer to Nelson. We have collected the data from outside. There is no such information collected by the government. I will talk to the Census and Statistics Department to see how we can collect such information. Mr. Chow, when it comes to the QR code, we are talking to the sector about a common one, so that retailers or shops don't have to use many different QR codes to enable payment. Of course, the mainland will use a QR code, but when it comes to scanning, we use an application. So there won't be any problem. In relation to Open API, members have mentioned about an issue of security, which is something that we attach a lot of importance to. When we launch fintech initiatives, we keep in mind the importance of security. That's why in this consultation paper we have talked about how we tackle security issues. Any other questions? I want to ask about ICO. I would like to hear answers from the SFC. Well, they say that, such issuers will have to get a license. However, when it comes to ICOs, it's rather high risk. Would you consider limiting to certain group of investors, say, for example, professional investors? So would you consider allowing a specific group of investors to participate? Julia. The current problem of ICO is that they don't come to us to get a permit or license. If they do, then we will, do everything that we would have to ensure customer protection, and we may consider professional investors because this is in a form of crowdfunding. If you want to get funding from the public, then as you have stated that it involves high risk. If they do come to us for license, we will consider whether it is more suitable to allow only professional investors or to have a wider scope. Mr. Christopher Zhang. According to the presentations at the Hong Kong MA, when it comes to promotion of fintech, they have started a lot of discussions with the mainland. In this regard, I haven't seen much work put in by the SFC, so I would like to ask if the SFC would do more to help the sector to use fintech. Say, for example, remote account opening as well as using WhatsApp to do transactions. So far there has been no conclusion, so I would like to ask if a clear conclusion can be given to the sector. Julia. Mr. Zhang asked two questions. First, to use WhatsApp to place an order and also remote opening of accounts. First, WhatsApp. If we used instant messaging programs to place orders, it is actually something we have been talking actively with the sector. That's one of them. If they use such applications to accept placement of orders, then they will have to abide by the requirement of central record keeping, and the records will have to be complete. For such mobile apps, customers are allowed to delete the message that you have just placed an order. Brokers should protect themselves. So you have to consider which version is true, your WhatsApp record history or the customers. We will talk to the sector to see if it is feasible. When it comes to central record keeping and complete record keeping, if they have been complied with, there is room to allow the use of that. But please be patient. I do believe that we will be able to issue guidelines shortly. Remote account opening. When it comes to cross-border account opening, Mr. Zhang asked if we can use biosecurity features to verify the identity of the client. We do think that biometric authentication may be one of the methods. And if, with the consent of the customer, such features have been collected, say, for example, facial feature, well, if that is used to authenticate the identity of the customer, well, with advancement of technology, the accuracy can be improved greatly in the future. But if that is used as authentication, it's different from cross-boundary opening of accounts, because the latter would involve more considerations. The verification or authentication of the identification of the identity will have to rely on something more authoritative, say for example, national identity cards. But because of privacy issues, a lot of countries don't divulge such information. So we have to think about how you can verify whether the information supplier is authentic, and whether the information you have obtained is verifiable. We're looking into them. But there will be certified authenticators, and we understand that under the Electronic Transactions Ordinance, under Smart City, we will see if there are institutions that can carry out the task of authentication using facial features, and if that is the case, then we will proceed. I would like to ask the SFC, these recognized institutions, can brokers approach them, or will they have to take the SFC? Individuals are not able to approach these recognized institutions. We know that under Smart City, we know that recognized institutions has been doing a lot of things as to how to use the information. Well, there are 5 prongs. Do you know what is missing? Application. So there is input, there is no output. So you won't monitor your performance. You don't monitor the performance of the government or regulated institutions, whether they have abided by all the requirements. 3 or 4 years ago, there was a survey done on how to develop London or UK as an international financial center. Well, her application is very important. I haven't heard anything from the government in this regard. They just say that they will ask departments to use fintech. And there is also something missing, blockchain. Government departments, statutory bodies, as well as relevant institutions, if it's something related to transactions and if security is important, then you may try to use blockchain. Well, there are a lot of companies from Cyberport coming to ask whether it's allowed to, the government allows the use of that, because the government themselves don't use it. Say, for example, labeling, place of origin. The mainland's using it. And then recently there is a heated topic of ticket scalping. Well, there is actually a solution. People from the sector talk about the use of blockchain. And it may be some macro issues, say, for example, land lease. The only thing the administration say in relation to blockchain is that the industry banks have been using that on a trial basis as a platform. So when it comes to blockchain, you only talk about ICO, talking about stringent regulation. Of course, ICO, there are some scams, and you should enforce the law, but you can't say that you can't think of anything that you can try. Don't forget that there is the treasury in FSTB. You receive a lot of revenue. There is a press report this morning that a telecommunication company that is connected with the with banks API, with open API, then you can accumulate points by bank payment You may not want to use that when it comes to tax payment, but actually there are lots of things that you can do. Can you give us a list of departments that are considering the use of that, and also a timetable? Well, we asked the same thing 2 years ago. Yes, there are actually two things. One is blockchain. Banks and Hong Kong MA have been conducting relevant studies on what functions and if they can be used by us. We have the technology to use blockchain, but when it comes to reliability, it's still subject to many tests.
So maybe Nelson can say something more about what the banks have been doing in experimenting with blockchain. Now, the member mentioned about the government taking the lead. Now, we've been working on e-wallet all along, and in the past year, we have talked to the major government departments, Inland Revenue Department, Water Supplies Department, Rating and Valuation Department, and are studying into it for bills received by general public. For the payment of these bills, can e-wallet be used? The government departments can actually use such e-wallet, but then this entails an upgrade of the computer system, and that takes time. So I hope that next time when we come back to report to you on this topic, we have some specific results to share with you. Technically speaking, it is feasible. Mr. Chow, application of blockchain, we agree with what the member said, that to banks, blockchain can be used in payment. And we are actively pursuing the relevant study together with the fintech company and banks, and we have issued 2 white papers previously. With regard to the Hong Kong Trade Finance Platform, we are serving as a facilitator, and we are also working together with the Singaporean authorities on cross-border blockchain. We are taking out tenders in the hope that more applications can be made in the future. Just one last word from me. Can you give me the list in relation to payment and blockchain, and setting out which government departments will adopt blockchain in the future? And a lot of the application doesn't have to do with finance sector. Maybe e-health records is one thing. That will be taken up by the Innovation and Technology Bureau. Can you talk to the Innovation and Technology Bureau? Because whenever we think about blockchain, we approach you, but actually a lot of the applications have nothing to do with finance in other sectors. Mr. Wu Chi-wai, I have similar questions like Mr. Charles Mox. First, I would like to find out, we've been doing a lot on fintech, but what are the government's concrete targets in promoting fintech? What kind of direction that you are driving towards? Do you have a timetable and roadmap for fintech development in Hong Kong so that the trade know exactly what the government is aiming at? Now, say, for example, e-wallet, we hope that in 5 or 10 years' time, Hong Kong will become a cashless society. I mean, is this a target that you have in mind? If that is your target, please stipulate clearly so that we know exactly what your roadmap is. We will not be trying this and that bits and pieces. We should have a target so that we know exactly what applications can be made. We are undertaking certain studies, and maybe neighboring countries will be using the results of our study, whereas for us, we are still not applying it adequately. That's number one. Number two, in application of fintech, maybe you have run into certain difficulties. Can you share with us the difficulties encountered? Is it has it got to do with, say, maybe the problems in the coordination among government departments or what? So PS, can you shed some light on that? And there is another question which is more academic, I would say. We have tried to promote fintech, improve the fintech environment. The ultimate aim, I believe, is that we should speed up and make it more convenient to do transactions. And to a certain extent, this will help in the speed of our transactions, etc. And because of this, I believe that there will be a growth in the GDP resulted. But if we can't really translate such efforts into really concrete, measurable results, and that's not going to work. So how can we then make sure that the application of such fintech can help Hong Kong, and Hong Kong can take the lead in certain sectors, and Hong Kong will be the premier choice for, say, certain sectors world round? I think that these are my three questions. Permanent Secretary, when we promote fintech development, what we want to achieve is to enhance efficiency and enhance the consumer's experience in transactions. Now, on the member's third question, what we want to achieve ultimately is that we want to lower business costs. As pointed out by the member, if we speed up the transactions and reduce frictions in transactions, so to speak, then that means the business costs can be slashed. And that is why we say that we have to promote fintech, because that, number one, it will help with our financial services sector. It can reduce their service costs, operating costs, so that they can provide more effective and efficient services. And at the same time, the user's experience can also be enhanced. So is there any target? Say, for example, Hong Kong will ultimately be turned into a cashless economy. No, today we don't have that kind of target. I think what we think of financial inclusiveness is very important. We want to apply or introduce different fintech initiatives in Hong Kong, and we try to remove regulatory hurdles as much as possible, and it will be ultimately up to the members of the public to choose the kind of services they would like to have. Mr. Chen Kim-po, I'm pleased to see that so many government departments in Hong Kong are now applying fintech. Now, but for fintech companies and insurance companies, how can you integrate the two sectors? Do you have any successful examples to share with us? What I'm concerned is that fintech companies will imagine what the needs insurers have, but then if there is no concrete dialogue between them, then that is going to be not good, because we won't be seeing a lot of application. Now, of course, initially you will talk about providing a conducive environment, and then later on you must share successful examples and to tell us whether you are heading in the right direction. So in terms of fintech and insurance sectors, what are you doing to integrate the two sectors? And second, what values can fintech bring into Hong Kong? I wonder whether you have made comparison statistics. What are the new jobs created? How many offices have been established? What fintech companies are lacking the most? What kind of assistance do these fintech companies want from the government? We have to look in depth into all these aspects. Looking at the investment amounts, I really don't know what they mean. Now, thirdly, for the PA panel's member, I hope that the government can actually conduct a special presentation on success stories for us. Permanent Secretary, my colleagues in the three regulatory bodies have talked about their cooperation with the sectors. They have a regular mechanism to communicate with the sectors on their fintech needs. Now, the member, well, in fact, in the past 3 years, one of the main objectives of our promoting fintech is that we don't want the sectors to believe that the fintech companies are their competitors. Rather, they should be partners. So can I now defer to Dr. Cham to elaborate first on what they are doing at the Cyberport? They've been running a lot of programs to help the sector and to help start-ups and to help them to tackle their difficulties. There are indeed specific examples of how startup companies have applied their R&D results to real-life situations and to help fintech companies. And at Cyberport, there have been a few successful examples. Indeed, Dr. Chan, please. We attach a lot of importance to the sector and startups integration. We've adopted many approaches. In the past, we've worked with HKMA and organized hackathons with banks, Bank of China, Hang Seng Bank, and Citibank, etc. Well, how do they operate? The banks will come up with real questions, and then we have asked IBM and startups to answer those questions. So the fintech companies, startups, and the banks work together to resolve problems faced by clients in the banking sector. We've organized several hackathons, and many solutions proposed by the startups have been adopted by banks. Say, for example, there is an API which can allow a customer to access different databases in banks. And actually, this startup company has participated in a competition organized by us, HKMA and the banks. And that's why they've come up with this very successful application. We've also invited many people in the sector to become our mentors. And they've actively participated in our programs. We attach a lot of importance to the integration, and the banks can actually adopt the innovative solutions proposed by some. A simple follow-up. So can you show us more success stories? Maybe do that through a visit. Well, try to organize some occasions for us to really look into detail the success stories. Permanent Secretary, can you give us some data on success stories of fintech? What is the amount of revenue generated? Are there any successful examples? And also the creation of number of jobs, etc. We know about the input, the regulatory framework, etc. But what about the output? Can you give us within this year data on your output? A member maybe has asked that site visit be organized for these successful companies. Maybe that cannot be done within this legislative session, but in 2018-19, can you give us some specific data? Yes, that can be arranged. We can go back and look at the data. We might not have data from individual companies, but we can work together with Cyberport, the number of companies established in Hong Kong, how big the cluster has got, etc. But as to exactly the business turnover of these companies, we'll have to look at whether the individual companies are willing to provide that sort of figure. But anyway, we can look into that. Mr. Hui Chow, in paragraph 18 of the paper, virtual banking is mentioned. Of course, the HKMA will facilitate the introduction of virtual banks and try to promote smart banks. I would like to find out. One approach is to introduce virtual banks, but for existing banks, they've been, say, running smart banks, online banks, e-banks, etc. What is the difference between virtual banks and these existing banks programs? say if existing banks have to follow your new guidelines for the virtual banks, so at the physical banks that we see on the street, would you be actually issuing guidelines to the banks? Would you be asking them to cancel some of the physical banks? Why I raise this question? Because at the district, some clients and some elderly people have told us that they might not be able to know or adapt themselves to the operations of the virtual banks and online banks. They would like to have physical banks and the staff there to help them with conducting their banking business. So I would like to know, going forward, what are you going to do? Of course, we have to advance with the times. We have to introduce virtual banks. But at the same time, how can you take care of the needs of the elderly people who may not be able to get familiar with the with the virtual banks easily?
Mr. Chow, we fully understand what members said. In the development of fintech, there is an important area. Well, the public. The introduction of virtual banks doesn't mean that ATMs as well as branches will be fewer. According to overseas experience, the introduction of virtual banks will promote inclusive banking, and it will also offer better services to SMEs. So we don't see so far that there is a significant conflict with conventional banks. We have received a lot of inquiries from local and overseas institutions about virtual banks, as some of them are already in the banking business. Mr. Chow, I would like to ask a supplementary question. You said that you would like these institutions and banks to go in tandem. That is, there will be the traditional services offered by traditional banks as well as the new service offered by virtual banks. But sometimes we see that where there are new services offered, perhaps because of cost consideration, all services are withdrawn. So I ask you to stay in close contact with them. They should not just think about cost without taking care of the community. I do understand that it is a business, but I do hope that all services can exist alongside new ones. Can we hear from the Hong Kong MA about that pilot scheme? Do you have the information about that? No, I don't have the information with me. It is one of our key areas. We don't want new services to replace old ones that is needed by the community. Well, there are some innovative banking services, say for example, mobile banking, withdrawals. Well, yes, under the pilot scheme, we are working with convenience stores to make it easier for elderly people to withdraw cash. Perhaps you can give us more information about cash withdrawal by elderly people. I think it's something Mr. Ronick Chen mentioned. Next, Mr. Junis Ho. I do believe that a lot of people are concerned about what we're doing and their effectiveness. I know that the PS will give us more information, and I would like to share with you this. Alipay and similar e-wallets. Well, Tencent is a Hong Kong listed company, so is and is listed in other parts of the world, so is Alibaba. Why don't we just simply learn from them directly? You may have a perfect plan, but if you don't implement it, it will be drawings on the board. There is a dedicated fintech team, well, which heads wealth management, S3, Insurance Authority, Hong Kong MASFC, and there is also the regulatory sandbox. There are many different names, there are many government departments. But what about Division of Labor? This is a very complicated structure. You gave us figures that from 2014 to 2017, you have found how many companies. There is an increase of 200 companies, and there is an investment of $900 million, which is pittance. We might have more than Australia and Singapore. But look at the mainland market. They have done much more than us. We're not even there to eat their dust. So we have WeChat payment and Alipay. Why don't we fully implement that? Well, for MTR, are you trying to protect the interest of octopus? Well, there are lots of vested interest. If you ask everyone, then it's too late. But they don't have a big brother. You do it, then you're a big brother. You need a timetable. What about the structure? Can you streamline it? There are many different departments. Would it be the case that in the end nobody does anything? That's what I'm concerned about. P.S. There are many different areas under fintech. Of course, there needs to be coordination with regulators. Our goal is to facilitate new services or new technologies to be used in Hong Kong. I will defer to Nelson for more details, but you do need to understand that when it comes to electronic payment, the overall environment is not bad. It's just that there is a low level of intake. There is a low level of take-up rate by Hong Kong people. It doesn't mean that it doesn't exist in Hong Kong. Mr. Chow? Two members mentioned about two brands. They have obtained license under store value facilities. You see that in the past 10 months or so, there has been different services offered by them to facilitate application of store value facilities. You see that in wet markets or taxis, well, they have been doing a lot to try to promote utilization. I'd like to ask some questions. Well, Mr. Junito talks about many different departments involved. FinTech, is it under the purview of Innovation and Technology Bureau or the FSTB? The chief executive said that every policy is to be implemented by one single bureau. So which is it? For FinTech, of course, is FSTB, but when it comes to FinTech, it involves a lot of R&D. And these such upstream R&D, say for example, Science Park, S3, that will be under the responsibility of a relevant bureau. Let me give you an example. Hong Kong MA is cooperating with Science Park. Cyberport is not under the purview of my bureau. However, we have very close cooperation with Cyberport. We have asked detailed questions in relation to this, and we will now go into the next discussion item, which is development of green finance. I thank government administration for coming to join us. Thank you.
負責呢個項目嘅
We have with us the FSTB and the Environmental Protection Department. I'm going to dispense with the introduction. Mr. Sun, are you going to take us through the paper? Please be succinct because we have overrun. Thank you. We have already issued information paper to members. I will just give a very brief introduction. Green finance is a new concept with huge potentials. If we look at past growth as well as the forecast growth, we know that it's something that we have to be well prepared for. We have right conditions to develop green finance in Hong Kong. We cover 4 areas in the information paper. Compared to other traditional finance, there is a very big distinction. Green is the word. First and foremost is to develop a local certification organization. In short, we need our own brand. We have already done something. We work with Hong Kong Quality Assurance Agency to establish a green finance certification scheme. This scheme has been operating. So when it comes to providing professional services as well as certification, we have taken the first step. In other areas, it's important, is the issuance of green bond. There are a number of green bond issued in the market. But if the government can take the lead to issue government green bond, this will be conducive to the development of green finance. In the budget, the Financial Secretary has already announced that there is a government green bond program with a borrowing ceiling of 100 billion Hong Kong dollars. We will introduce a resolution to LegCo as soon as possible. With the support of LegCo, we will start to put the program in place. Revenue generated by the program will be plowed back to the Capital Works Reserve Fund to fund green public works project meeting the criteria we have set. The third one, well, since we have a local certification scheme, we would like to further promote it. So there is a green bond grant scheme. This is to attract more issuers to come to Hong Kong to issue green bond. When it comes to certification, the government will offer grants. Our initial thinking is that the grant ceiling is 100,000 per issuance on the reimbursement basis. We don't impose any restrictions on tenure, but we would like them to have a minimum size of 500 million Hong Kong dollars. We're still working on the details. Once we have them, we will announce them. The 4th area is promotion of international collaboration. Green bond is a huge market globally. Hong Kong is an international financial center. We hope to better promote Hong Kong as a green bond issuance center in the world. The Hong Kong MA has made preparations to organize in June 2018 Green and Social Bond Principles Annual General Meeting and Conference. This is an international event. We hope that this will enhance our image and also bring us into the international spotlight. We have Mr. Ronick Chen, Chen Kim Po, and Jeffrey and Christopher Zheng. Mr. Chen, 4 minutes each. I agree with Mr. Sun. Well, there will be a very good prospect of the development of green finance in Hong Kong, especially green bond. But I would like to ask 2 questions on direction. Back in 2017, there was the Stock Connect. So far, it's only is only northbound. Investors are allowed to invest in our equity market. I do believe that southbound investment will start soon. So will green bond be included in the southbound investment? Because this will facilitate mainland investors to invest in Hong Kong, and this will also invigorate Hong Kong's market activities. And it also says that in 2018-19 there will be a government green bond program with a borrowing ceiling of $100 billion. That is equals to 5.5% of the $1.8 trillion in the bond market in Hong Kong.
And then you talk about the green bond grant scheme, pilot scheme, and if this comes to pass, then it will convey the message that the government is really determined to develop green bonds. So will the government model after major markets in launching green bond indices so that Hong Kong can also be one of the constituents in such green bond index? Thank you, Deputy Secretary. Thank you, Mr. Chen, for your questions. Bond Connect. I believe that the members that we are now enhancing the northbound transactions, and for southbound transactions, we are working very hard so that we can do more and that southbound can be implemented as soon as possible. As for the details of the southbound transactions, including whether it will cover green bonds issued locally, we will also consider it. Second question is about the government's green bond scale. We are talking about borrowing ceiling of $100 billion. When the government has got some bond programs now. It's $200 billion is a ceiling, but it doesn't mean that we will issue $100 billion at one go. We would submit a resolution to LegCo to get that borrowing ceiling approved first, and then we will issue the bonds in phases. The first phase of green bond, depending on market circumstances and the government's green works projects, our estimate is that is around 500 million to 1,000 million US dollars. So we have to test it out first. So if we go by that range, we think that it can be readily absorbed or accepted by the market. Mr. Chen also referred to future development. Say if the green bond market has matured, we will be coming up with a green bond index. We understand that there is such an index in other places. We will pay heed to Mr. Chan's views and we'll consider it further. We will look at what the future development is. Right now, we don't have such a plan. Mr. Chen Kim-pa, the paper talks about the strategy of the government in developing green finance. And one special feature is that you have a green bond grant scheme and you will be giving out $800,000 per issuance. Of course, we want Hong Kong to be developed into a world green bond center. And actually, in the mainland, there are so many green projects going on. So if we succeed in our efforts, then the mainland market will bode well for us. But do you have any target for the development of green bonds? Say, for example, in 5 years, you hope to, say, accept or been absorbing $300 to $400 billion in green bond, so that you know how you are doing with this 800,000 grant that you are giving out. Of course, we want the green bond market to develop well, but it's very difficult for the government to put up quantitative indicators. Ultimately, the size of the bond market depends on how investors view the Hong Kong market. What the government can do is we will try to put in place the best infrastructure to come up with policies to facilitate bond market development. So, for example, for green bond, we have this green bond grant scheme, and we aim to provide certain incentive to attract people to come to Hong Kong. The cost for this GFCS is not high, but then for the issuer, that is quite an amount. But then if we can promote our green bond brand, and we can also provide a appropriate subsidy for green bond issuers, then that would benefit the market. Now, as to how we come up with this $800,000, it's not that the issuers must spend all the amount. We think this is a reasonable ceiling. The actual expenditure may be lower than that level, depending on the requirements of the issuance. But we have taken reference from our neighbors in similar schemes, and we think that the $800,000 is quite competitive in terms of the amount, and we hope to attract overseas issuers to come to Hong Kong. Now, Mr. Chen, of course, your thinking is very good. You have your own green bond, and you want to attract people to issue green bond in Hong Kong. And there is a certain meaning behind this bond scheme, because you want to support green projects. But do you have any specific measures, like there will be a high interest rate or yield rate? You want more people to buy the green bonds, right? So at the retail level, what kind of measures do you have in mind? Have you taken reference from other places on how to enhance the popularity of green bonds? How can you attract people to buy green bonds so that more demand is created? Yes. Yes. We have to be mindful about the supply and demand, and whether for the interest rate of green bond, well, it depends on the market and the demand and supply situation. Compared to conventional bonds, there may be more fluctuations in the interest of green bonds. But we think that if it is a quality green bond, the difference is not that huge. In the region, the demand for green bond is relatively weak compared to Europe or US. But the world around, we have higher demands for environmental protection, sustainable development, and responding to climate change. And we understand that more institutional investors are buying green bonds these days. So in view of the development in the market, if the Hong Kong can move fast and develop our green bond market as early as possible, that would be good. Because we will not be attracting investors locally. We aim to attract international investors as well. And I think Hong Kong is well positioned to do it, and we do have our edge in doing this. Mr. Christopher Chang, I agree what Mr. Ronick Chan said. The northbound Bond Connect has been implemented. Let's do southbound as soon as possible, because we want to enhance financial cooperation between the two places, and that will do all sorts of good to our market development. Now, the government, the sector is very supportive. The security sector is very supportive of the government developing green bonds. So can these green bonds be listed on the exchange market? That can also mean diversification of the securities products. Well, the transactions should not be just confined to banks. If transactions can take place in the exchange market, then that would be very good. It won't adversely affect the banking sector. It would only help to add more vibrancy to the market. So, and also please allow the SMEs to take part in the green bond market. So that's a concern of the sector. Second point, the Deputy Secretary just now said that we would be issuing $100 billion in green bonds. That is a ceiling. Would it be like the I-bond? The securities brokers or firms can help our clients to apply for the green bond. So the application should not just be confined to the banks. Can securities firms take part also in the green bond business? I hope that the government can consider this. Deputy Secretary, thank you, Mr. Zhang, for your question. Regarding green bond, government green bond, as stated in the paper, we have considered the fact that green bond is more complicated as compared to a conventional bond. So in the initial stage, as like what other jurisdictions are doing, our target groups are mainly the institutional investors. So institutional investors is our target group in the initial stage. But we understand that balanced development is important. And we understand that there are different players in the finance market, including the brokers. Not particularly on green bond, say for silver bond. This is another type of bond. And this year, as what Mr. Zheng said, we have considered how securities firms can also take part in the issuance of silver bond. We have already done some work in that. Through some technical revisions, all securities firms can take part in the silver bond. But then silver bond is very much a retail product, but then green bond aims at the institutional investors. So that's different. You talk about green bonds being more complicated in a way, and you are targeting the institutional investors. But the securities brokers have a wealth of knowledge on risk management, and I think that in a lot of new initiatives in the financial market, the securities firms have not been allowed to participate. Is this a failure on the part of the government in its policies? You pay lip service in supporting SME securities firms and SMEs in taking part in finance initiatives, but in effect, you are not allowing us to take part. So I hope that the government can review on the situation so that the SMEs can also take part in the latest finance initiatives, including fintech initiatives and also green bonds. We are well positioned to take part in such transactions, and I hope that the government can allow us to take part. Any response? Thank you, Mr. Zhang, for your suggestion. As always, we talked a lot to the banks and brokers and so on, and we want to make sure that the SMEs can also make use of their expertise to take part in our finance initiatives. We are at a start now, at a starting point only, and in the process we'll make sure that we will communicate with the stakeholders well, so that their expert knowledge can be fully utilized in helping with taking forward such initiatives. Mr. Eddie Zhu, I have read through the paper, and my stance is that the capital market will not be able to address the problem of the deterioration in the global market. And these problems are actually created by the capital market itself, whether it's the petrol, the oil rigging, and also and so on and so forth. And you are now dealing with carbon transactions and green bonds and so on. I think it's a dead end to me. Now, in any case, I have two specific questions. The government will issue $100 billion worth of green bond. You said you want to enliven the market, and the $100 billion will be credited to the Capital Works Reserve Fund for green public works projects. I would like to ask whether the Environment Bureau or the Development Bureau have certain projects which are not in the top priority, but then since we have this $100 billion, they will be given priority then. Do you have a list of such projects, and when will we get the chance to discuss the resolution at the Finance Committee? Second, The government is saying one thing, but then doing another. If it is not that, if you really want to issue green bond as part of your green initiatives, you should not just work on issuing green bond. The government should also take the lead in taking away projects which do damage to the environment. So apart from instilling money into such green projects, do you at the same time have the plan for the government to take the lead, say, in taking away certain capital from projects which are polluting the environment? Do you have the same kind of thinking?
Yes. Well, I thank Mr. Ju for the question. Let me explain the details we have in mind under the government green bond program. When the government, well, after the government has issued the government green bond, proceeds will be credited to the Capital Works Reserve Fund. You can see this as another way of financing. The vetting of projects under the fund will remain unchanged. That means all projects will go to the Finance Committee for members' scrutiny. I understand that. But when it comes to these broad projects, will there be changes between the in the government departments? If there is no change, that is, if it doesn't cause change in behavior on the part of the government, there is no use. Well, when green bond is issued, you will have to select suitable green public works project. We will select projects that meet the criteria for inclusion in the program. I can't say that whether certain projects will be expedited. As you understand that there is an internal established mechanism when it comes to approving government projects. There is also the Finance Committee. But with government green bond program, we hope that government departments and investors will be more concerned about green projects. We think that the disclosure under the program will help a lot. When it comes to Capital Works Reserve Fund, with the government bond program, it will provide a lot more help to fund green public works project. What about the other question? It is a bigger issue. It's an international issue, so it's difficult for me to answer on behalf of the government when it comes to investment, because what Mr. Ju mentioned is an international issue. Next, Mr. Junis Ho. When it comes to the government green bond program, paragraph 7, it says that such projects will have to provide positive environmental benefits, such as projects relating to renewable energy. Well, you now ask for $100 billion to start to improve renewable energy efficiency. In the policy address, there is a mention that we have to make better use of solar power. We know that there are about 300 government buildings that will be installed with photovoltaic panels. Well, you get the money from the public, and so you have to enable public participation. I don't know about maths. I don't know how to work out returns. But if you ask the public to give you $100 billion, well, a lot of this will be business behavior, so you will have to give them interest. Say, for example, over 5 or 10 years, there will be 3 to 5% return. How is it going to be included in green projects? Well, the government will do their part, so will the public. Will you consider doing this? Say, for example, for new territories, small house. Well, each one you want them to install photovoltaic panels, but they will not do it out of their own pockets. And if the government wants to pay, where if there are 10,000 small houses for 10,000 installations, say, let's say each is 200,000, then it will cost $2 billion. If there is a scheme by which the government will arrange everything for you, this can be used for solar power. It will reduce carbon emission. I think Paris Treaty says that 6.5 tons per person, and in 2026 or 2030 it will be reduced to 3 tons. It's rather ambitious. So will you consider solar power that you will start first? Well, there is such a thing in the market, but will you subsidize it? So will the government put in place a pilot scheme? DS, are you able to answer the question? In relation to solar power initiatives, I will defer to Mr. Chang, but I would like to say this first. There is no funding shortage under the Capital Works Research Fund. We issue green bond not because there is a shortage of money. We just want to promote the development of green bond market. In the long run, there is another avenue for financing. That's it. And I will defer to Mr. Chang when it comes to solar power. Mr. Ho talked about solar power. The SAR government attaches importance on it. The policy address says that $1 billion is earmarked for implementing small-scale renewable energy projects in government buildings, and later we will also announce details about off-grid power supply. Well, members of the public can also have their own renewable energy projects, and they can sell the surplus energy to the government as well. So there are different initiatives to promote the use of renewable energy. Members of the public can also make use of a solar power certificate. We're working on the details. Announcement of the details will be made later. Mr. Holden Chow. Well, we have the $100 billion green bond, and this will be used. The proceeds will be used for funding green public works project. You say that it will not affect projects coming to the Finance Committee. Assuming that this is going to go ahead. So, does it mean that if you put in $10, $5 will be used for green bond, the other $5 will be used on the green public works project? Or is it the case that if it can be fully funded by the process of green bond, they don't have to come to the LegCo? Because it says here that these projects will come to LegCo. But if financing is done under the government green bond program, then it won't be a funding application. I don't understand. Can you explain to us whether the projects will still go to the LegCo? But that is not what the government means. Let me explain about the proceeds of the green bond. The proceeds will be credited to the Capital Works Reserve Fund. And all government projects, including green projects, are funded by the Capital Works Reserve Fund. That is one thing. All government projects, including green public works projects, will have to be approved by the LegCo. One thing is to credit the proceeds of the issuance of the green bond into the reserve fund. That's one thing. The other thing is that all projects, including green projects, will have to be approved by the Finance Committee. The only difference is that we will issue green bonds so that there will be one more avenue for financing for the reserve fund. And the interest is not dealt with by the fund. So there is another financing channel. This will show the government's determination to promote green financing, and it doesn't in any way change the established mechanism when it comes to approving public works projects by the LegCo. I now understand. Mr. Wu Chi-wai, I would like to clarify this concept. You keep talking about using green government buildings as a way of financing. So there will be a number of government projects that meet the criteria under the green bond program. That's why members have been asking whether there is a list. And you may say that this is just another government bond. You just give it a nice name and call it green bond. And there is only one criterion. The $100 billion will be used to pay for green projects. So which is it? The biggest distinction between green bond and government bond is that the green bond is used for green public works project. At the time when the bond is issued, it may be targeting a specific area, say for example renewable energy, wastewater management. But once the bond is issued, investors will need to know specifically where the money has gone to. So when you issue the bond, there is also a basket of projects. Yeah, we can do that, or it can be targeted on a specific topic. And in the end, the use of the money will be used for specific projects. There will be an external certification organization to help us. So you want to sell the issue green bond, and it will be related to certain assets, but without specific information, say for example what is included in the project, there is no way for any assessment to be done. And if you say that this is just another government bond, it doesn't really matter what the projects, what the money will be used on which projects is in any way just government issued bond. Or is it the case that you will have to let people know the basket of projects to be funded before you issue the bond? Because in this way, investors will know whether it is worth making an investment.
I'm talking about this $100 billion green bond program. There are two stages. I believe there is the authorization of the resolution of the program. At that stage, you have to vet it and approve the resolution. And before that, you would not be able to give us the detailed programs. When we come to the next stage, and that is we are to issue different tranches of the bonds, would you give us the details? Say, for example, for the first $50 billion bonds, which projects are covered? So can you clarify whether this is the process? Yes. We hope that the electrical can approve the $100 billion as a ceiling for us. At that stage, we won't be able to give you a complete list, exhaustive list. We will set out the major projects, of course, but when it comes to actually issuing the first tranche of green bond, that we need definitely a list, even if it is not a complete list, at least the majority of the programs or projects will be covered. Say, if the projects may cover green buildings, then we will say so. But will there be a fine-tuning of the different items that will be allowed? Well, in a nutshell, we would definitely have a list. Can I follow up on one further point? You emphasize that for the green bond targets the institutional investors. This is a government-guaranteed bond program. What are the reasons that green bonds would only be sold to institutional investors and that it can't be dealt with at the retail level, allowing the public to participate? Well, please answer briefly. In planning for issuing government green bonds, we have also to draw reference from practices in other places. Now, for now, green bonds in other parts of the world target institutional investors only. And it is a relatively new concept. It is more complicated compared to conventional bonds. So a more prudent approach is that at least at the initial stage, we would target the institutional investors. But as we accumulate experience, we would definitely think about further expansion or possible expansion, because maybe there is high recognition of green bonds in the market. Then we can further consider that. I would like to understand more. You say this is going to be a complicated type of bond, but the gist is that it is a government guaranteed bonds. It comes only with a label that is a green bond. If it is a government guaranteed bond, I don't see how complex it is. Now, complexity is usually associated with risk. If risk doesn't exist that much, how come that we only allow institutional investors and not members of the public to take part in this bond program? Deputy Secretary, please be brief in your response. Thank you, Mr. Wu, for your question. Green bond is a relatively new thing, I would say. We have drawn reference from practices in other places, and we have also taken on board the special features of the green bond. We think that as a start, we would target the institutional investors only. That is a more prudent approach. We understand where the member is coming from. Once we accumulate experience, and if the public are more interested in green bonds, then we will further consider expanding the program. So that's it for this item. I would like to thank the relevant government officers. Then let's move on to the next item, and that is the legislative proposals. The next item is legislative proposals and laws absorbing capacity requirements under the Financial Institutions Resolution Ordinance CAP 628. So can we invite the administration team to join us? This is quite a huge team. So it's again the FSTB colleagues and Inland Revenue Department, Hong Kong Monetary Authority colleagues being here. So I now the Deputy Secretary to brief us in 2 to 3 minutes, or Mr. Robin from the Hong Kong Monetary Authority. Can you?
Of this item, please. Thank you.
Please, Robin.
Please.
Good morning. So this morning I'm going to briefly introduce the proposed rules on loss-absorbing capacity requirements for authorised institutions. In this presentation I'm going to start with a brief explanation of the purpose of these rules before going on to talk a little bit about the background of the resolution regime in Hong Kong. I will then go on to discuss some of the key provisions and also discuss some proposed consequential amendments to the Inland Revenue Ordinance. So to start with, what is the purpose of these rules? So the primary purpose is to support financial stability in Hong Kong, an important element of which is protecting banks' depositors. The failure of a bank can, of course, pose a risk to financial stability in Hong Kong and to the wider economy, and can lead to banks' customers and depositors being cut off from their money. To prevent this from happening, should a bank run into trouble, it is likely to need additional funding. These rules will require banks to issue a new type of debt that can be written down or converted into shares if the bank runs into trouble. This action would remove the debt from banks' balance sheets and provide a funding boost. The failing bank is in this way restored to financial health by losses being imposed on investors that bought the debt. This avoids the need for a bailout of the bank's shareholders and investors with public money, while maintaining financial stability and ensuring that depositors are protected. The experience of the global financial crisis illustrated that a new regime was needed to deal with failing systemically important financial institutions. And this, of course, was the motivation behind the bringing into force of the Financial Institutions Resolution Ordinance in July 2017. Under the FARO, each of the three existing regulators, the Monetary Authority, the Securities and Futures Commission, and the Insurance Authority, is identified as a resolution authority for dealing with the failure of respective financial institutions within its purview. Now, in order to deal with the failure of financial institutions, the FARO provides a number of stabilization options to each of the resolution authorities, which includes the bail-in stabilization option. The bail-in option allows a resolution authority to write down or convert into shares liabilities of a failing financial institution. And as discussed above, this can allow losses to be imposed on investors or certain creditors of a bank rather than on public funds. However, some liabilities can be more easily bailed in than others. And so for the bail-in option to be effective, banks need to have a sufficient stock of liabilities that can be bailed in. And these liabilities are referred to as loss-absorbing capacity, or LAC. LAC consists of regulatory capital and certain other types of debt instruments. And what these proposed rules will do is require banks to maintain minimum levels of loss-absorbing capacity of LAC. Now, the Financial Stability Board has previously issued international standards on loss-absorbing capacity for systemically important banks. And these rules that we're bringing forward now are broadly aligned with these international FSB standards. So that's a brief introduction to the background. I'm now going to talk through the key provisions of the proposed rules. Now, under the FARO, if the failure of a bank poses a risk to financial stability in Hong Kong, then the Monetary Authority, as resolution authority for banks, can put it into resolution. And in order to prepare for that, the FARO empowers resolution authorities to develop a resolution strategy for dealing with a failing financial institution. Where there is a resolution strategy that envisages a bank going into resolution, should it fail, then under the LAC rules, the Monetary Authority would be able to classify that entity as a resolution entity and together with one or more of its subsidiaries as a resolution group. Once classified as a resolution entity, under the rules, the bank would then be required to issue LAC to entities outside its resolution group, so external LAC. Subject to certain conditions, the rules would also allow the Monetary Authority to classify a subsidiary within a resolution group as a material subsidiary. And under the rules, a material subsidiary of a bank would be required to issue LAC internally to another entity within its group, hence internal LAC. An important point here is that the development of the resolution strategy, the classification of entities and subsidiaries, and the meeting of LAC requirements needs to happen in normal times before a bank gets into difficulty to ensure the LAC is in place to deal with any problems should they arise. Just going to talk briefly about the calibration of LAC requirements. So under the rules, a resolution entity will be required to have LAC requirements that are equal to twice their regulatory capital requirements. This means that if a bank suffers losses that wipe out its regulatory capital, it has enough remaining LAC in place that can be bailed in to restore the bank to financial viability and allow it to again meet its minimum capital requirements. Under the rules, a material subsidiary would need less internal LAC. It would be calibrated in the range of 75 to 100% of the amount required of a resolution entity. But note that under the proposals, the monetary authority could vary either of those requirements on institution-specific grounds. The final point to bring out here is that because these LAC debt instruments are going to be specifically designed to absorb loss, they are going to be complex and risky, and are therefore unlikely to be suitable for ordinary retail investors. So under the rules, it is proposed that they can only be issued to professional investors.
OK, thank you. 而家排緊隊問問題嘅有陳振英議員，仲有冇其他議員想問問題？
Well, we have Mr. Ronick Chan in the queue. You have 4 minutes. I see that in relation to the amendment to the IRO in the Revenue Ordinance, between February and March, there was a consultation of 2 months. It ended on the 16th of March. Can the administration talk to us about the 10 submissions they have received? What are they about? The second one, well, when it comes to resolving loss absorbing capacity, well, when it comes to there is one type that is globally systemically important financial institutions, as well as those that are local ones. When it comes to local ones, for capital, for additional Tier 1 capital and Tier 2 capital, they may not be issued in Hong Kong. So does it mean that they will only be systemically important financial institutions that will be covered? I see that in 2016 there was an amendment to the IRO. Well, for certain debt instruments, there were special tax treatments. However, at that time there were no LAC rules or FIRO. So, are there any debt instruments that are allowed under Basel, but for some reason, although they are eligible debt instruments, they are still not given equal tax treatment because we are very slow? Who is to answer questions? The Inner Revenue? DS, shall we hear from you first? Well, I will answer first, then I will defer to Rob about the submissions we have received. We have to change in accordance to changes in the international standards. Then we will introduce local legislation. So when it comes to amendments to the Inner Revenue Ordinance, we will do it step by step. 2 years ago, because of the Tier 1 capital and Tier 2 capital, we have amended the IRO. And this type of debt instruments will be given the same tax treatment as the current regime. Well, for LAC debt instruments, they are very special. They are debt instruments. However, under special circumstances, they may be turned into equity. However, currently there is uncertainty to its tax treatment. We would like to amend the IRO to remove the uncertainty. In short, where there are changes in international standards which result in amendments to local legislation or the IRO, we will do it step by step. For the first question, I'll defer to Rob about the submissions. Mr. Probin.
Sure. So, as you pointed out, we had 10 responses received from the consultation, including a number from the banking industry. Obviously, I won't go through kind of all the details now, but 2 or 3 consistent points that came out were a request from the banking industry that these rules be as consistent as possible with international rules previously issued by the Financial Stability Board, that in implementing them, the monetary authority seeks to do so as much as possible in cooperation with overseas resolution authorities for cross-border banks, and clarity was also sought that the smallest non-systemically important banks kind of would not be covered by these rules. And on that last point, the HKMA is planning to issue a code of practice over the summer, which will provide more clarity.
Anything to add? The amendment to the IRO, whether it targets local SIFI or global SIFI, I would like to ask Mr. Chiu, the Deputy Commissioner, to answer. Our understanding is that well, as long as they are within scope FIs, whether they are global SIFI or local SIFI, they should both be covered. In 2016, when the IRO was amended, it involves overseas incorporated banks with branches in Hong Kong. For RCS, if they are issued by local or overseas banks, the approach is consistent. The Inland Revenue's understanding is that there will be a new concept introduced in the amendment. It is called a clean holding company. It will only involve local corporations. Any other questions to this item? If not, well, we have completed with this item. I thank officials for joining us. We now move on to the next one. We still have the Deputy Secretary here with us. A number of members have already raised their hands.
4位都舉晒手啊！你計埋副主席啦嚇。係啊。好，請下一個議程項目嘅
Let's invite administration representative and those are for the regulators and the Hong Kong Exchange to come in to join us.
Members.
This is the report on consultation on a listing regime for companies from emerging and innovative sectors by the Hong Kong EX, Hong Kong Exchanges and Clearing Limited. I will give an introduction of officials who are present. We have Mr. Ashley Alder from the SFC. Next to him is from the Hong Kong EX, Mr. Charles Lee. Next to him is the Deputy Secretary, Mr. Sun. The row behind, we have Mr. Brian Ho from the SFC, Mr. David Graham from Hong Kong EX. Next to him is Ms. Grace Hui, also from Hong Kong EX. And to the rightmost is from the FSTB, Ms. Ada Chan. Perhaps I will ask Mr. Lee to give us the presentation. Is that right? Please start. You have about 10 minutes.
Thank you very much, Honorable Chairman and members. We have submitted a number of documents and including a presentation, and we appreciate this opportunity to make the introduction. With your permission, instead of actually presenting those PowerPoints slide by slide, I would just like to spend the next few minutes giving you a very quick summary on 3 key questions. Number one, why we undertook this reform, and 2, have we struck the right balance in our view between enhancing competitiveness and also protecting our investors, and 3, are we confident that this reform is going to allow us to proceed competitively? I think on the first question, why we have undertaken this reform, essentially Hong Kong is a small market. We are a small market between 2 very big markets. So our market positioning and competitiveness really derive from our ability to differentiate ourselves and to connect it to market, make the Chinese market more internationally connected, and make the international market more connected with China. So with that mission in light, we need to be absolutely stay competitive, stay relevant, and stay agile. So it is in that spirit that we have undertaken a lot of tasks over the years to really make sure our market connect with the 2 big markets, international, particularly U.S., with China. And Stock Connect is a very prime example of that success. But however, in one very important area, we have fallen behind. It is the area where we have not been able to fully embrace new economy. Even though we welcome everybody to come, but there are existing regime restrictions that make it difficult for new economy companies to come to Hong Kong to list. And in this area, U.S. take a very strong lead globally, particularly with respect to Hong Kong and China. It is in the area, in particular, on weighted voting rights, on pre-revenue track record, and also on secondary listings. Those are important areas that unless we take important changes, it is very difficult for us to maintain competitive edge over this large wave of new economy companies that have come of age over the last few years. So it is in that spirit we have undertaken this reform. It has not been easy. It come a long way and overcome a lot of challenges. But we are very close now. We are now at the finishing line. We are about to announce by the end of this month, hopefully, the overall rules so that we will begin to take applications once that is done. This is really something that we can't afford not to do because new economy will continue to be the engine of global growth, and particularly in China, and Hong Kong has to be on top of that. Our second issue I want to address as quickly is, do we think we have struck the right balance between enhancing competitiveness but at the same time protecting minority investors? Protecting minority investor has been, from the very beginning, the focus. We all know how to enhance competitiveness, but sometimes reconciling that with protecting investors is very, very difficult to achieve, and we wanted to make sure that we are able to do that. And so very happy to report that this entire regime has not done anything in any way that diminish the protection measures that currently are available under our rules to protect minority investors. Our unique issue in Hong Kong and in Asia in general is that large number of companies that we have majority controlling shareholders, whether they're state-owned or whether they're family-owned or privately owned. It is the goal of the regulators and exchanges to protect the minority investors against potential misuse of power by the controlling shareholders. It is important to note that this reform has not changed any of that. We are not changing anything about protecting minority investors. All we did is to find a different way to allow people to essentially reach the level of control. Historically, in the past, in our rules, the only way to achieve control of a company is through investment of financial capital. Whoever put more money end up in control. We only just recognizing the new economy's special nature that in this space, sometimes the contribution of human capital, whether it's intellectual properties, new business models, founders' visions, a number of other important attributes that allow important founders to continue to contribute massive value to the company. So it is in that regard, we have simply changed the way we used to allow people to reach controlling stake. So the whole reform is not about changing the protection of minority investors. The reform is about allowing a different way of reaching control, which we did. So it is in that area that this reform is all about. So, but even with that, we decided that there are a number of other features we have to put onto the system to ensure investors are adequately protected against unforeseen events in the future. For example, sunset. If people die, they can no longer keep WVR. If they transfer the shares, the WVR goes away. And a number of other issues. They have to be participating actively in management or directorship, otherwise it goes away. In biotech chapter, we're also accelerating delisting process, making sure that shells are not going to be created, for future problems. So we are very comfortable that we have struck the right balance, but we will continue to be absolutely on top of this issue and stay alert. The last quick question is, with this reform, are we confident it will be able to do what it designs to do? Yes, we are. It has been 4 years since we've been doing this. We obviously suffered a very major setback 4 years ago, but since then we have tried very, very hard. Obviously, over the weekend, I'm sure members and have read about changes that are also taking place in China. Mm-hmm. We knew this is coming. It's just a matter of time. Every market is essentially doing the same. We cannot, China, Hong Kong, cannot allow our major new economy leaders to ultimately choose the U.S. market to list forever. They have to come back. So they can come back to Hong Kong. Now China itself is welcoming them to come back. This is just something that we think is going to happen. Obviously, it took it took 4 months for us to announce, and then this also was announced in China. All this is happening is to make sure is actually at the end of the day is to increase the overall pie of what we are seeing in the new economy. Hong Kong will continue to be a strong beneficiary of this. This is the important breakthrough in China, and I think together with Hong Kong's reform, we are creating a massive momentum. We are seeing larger number of companies expressing interest now. We're seeing much faster pace of companies wanting to access. We're seeing a much higher level of investor sentiment and confidence in this sector. So this is a unique strength of new economy that both us and the domestic Asian market have identified as the future driver. So I think together this is going to be a great transformation to come. And Hong Kong will continue to maintain our unique strength and unique competitiveness, even in this environment of everybody trying to do similar things. Our biotech is going to be a unique sector that is not yet open in China yet. And our regime, Hong Kong, with the one country, two system, continue to provide flexibility, internationalization, and a greater market freedom. So together, we think we're going to see explosive growth in this sector, and together this reform will help us. Our confidence derives from the fact that 25 years ago, China has no capital market. We are the only primary market, almost like the home market of China, and U.S. was the international market. Then China's domestic market happens, and Hong Kong didn't lose out, and Hong Kong then become China's primary international market. And U.S. market is no longer relevant for most Chinese companies. Today, before this reform in China and Hong Kong, U.S. is the only market for new economy companies from this region. Today, with our reform, we will become their primary market. With their reform, we will again at least become their primary international market. And many of the companies listed there will choose to list here, like A&H, because CDR is a foreign depository receipt. So Hong Kong still is highly competitive, and we are highly confident with our future. Thank you very much.
Thank you, Mr. Lee. For the benefit of our guests, I think I will conduct the meeting in English, although I think the members can ask questions in any languages. On the list, we have Chen Zhenying, Zhou Haoding, Mok Lai Guang, Zhang Huafeng, and Wu Jiwei. Chen Zhenying, 4 minutes, please.
Thank you. 首先要申報下利益。
First, I must declare an interest. I hold shares in the Hong Kong X, so I must declare that first. In the global financial market, the many markets in the world have revised their listing rules to attract new economy companies, and I support the Hong Kong government Hong Kong doing the same. I have 2 questions for the SFC and the Hong Kong X. In paragraph 14, in the paper, it talks about biotech companies, and if they do not achieve their business plans and maintain their business, then they will be given a period of up to 12 months to comply with the relevant requirements, and if failing which, the exchange will cancel their listing. So I would like to ask, during those 12 months, during this so-called observation period, will you give alert or issue alerts to the investors, say if the company has entered to that 12-month stage? So the investors will be reminded that these companies are not meeting with some of the requirements. So the investors can make their own decisions on whether to invest. So that's number 1. Number 2, I have a question on paragraph 16. It is said that the WVR beneficiaries will be required to demonstrate that they have been materially responsible for the growth of the business by way of their skills, knowledge, or strategic direction. Well, only when they meet with that kind of conditions will they be a WVR beneficiary. So how are you going to do that? How? Now for the professional sector, we do have our continuing professional development every year, and that is a requirement, and that is to show that they keep abreast of the latest development. Now, since these WVR beneficiaries will be getting benefits, so will there be, say, assessment mechanism or assessment exercise conducted once every 5 years on these people, so that it can be proved that they contribute to the growth of the business by their skills, knowledge, etc. So such assessment can be done by, say, the Hong Kong X or the relevant organizations. So this is to avoid a situation whereby the founders may not be taking part in the business of a company for a long time, and yet they are still benefiting from the WVR regime. So who is to take that question, please? Mr. Elder.
Elder.
I'll take the second question first. I think actually the first thing I'd say, just as an opening remark, is that designing a world-first set of rules for WVR has not been a straightforward process, and far less straightforward than those who've been looking at it from the outside might think it is. The second thing I'd say is that there is a perception that the SFC at some point said there will be no WVR. Actually, what we said was that it is difficult, and that a number of questions need to be answered before a WVR structure is put in place for Hong Kong, which is suitable for Hong Kong. So that's where we are now, I think. Dealing with the second question, I think the issue here is, and it goes to some of these difficulties, is that clearly the way in which the rules are now proposed, there will need to be a judgment call early on at the time of listing as to whether or not a founder actually qualifies under what are essentially subjective criteria, which means that the listing committee and the exchange will have to be very, very careful as to how they apply those criteria. And part of this is around those founders also being expected to be intimately involved in management throughout, including being a director of the company. Beyond that, I don't myself think it is feasible to really do a kind of a test every 5 years. And I suppose the implication would be that if the test were failed, then the WVR rights would fall away. I don't think it will be possible to do that in practice. So I think a lot will be around the initial judgment and also the expectation that the founder will continue to be involved in management, subject ultimately to a sort of, I think what the exchange has termed a natural sunset clause in the end, so that if someone is no longer a director or attempts to transfer the shares, the WVR rights fall away.
Mr. Graham.
Maybe I can take the both questions. I think in relation to the second question, I would support what the SFC have said. We've been very specific as to the grounds on which the WVR would fall away, and I think it would be very difficult to get into the types of assessments which you've just described. They would become too subjective. In relation to your first question, in relation to paragraph 14, the position in relation to most or all main board companies, if they fail to meet our continuing listing obligations, then they get suspended. So what we are talking about here in relation to the biotech companies is if they fail to meet our continuing listing obligations in terms of assets and operations, they would be suspended, and the market will know that the company has been suspended. And then they will have a 12-month period within which to satisfy the continuing listing obligations and be reissued back onto the stock exchange. So I think investors have no risk during that period.
Thank you. The next member is Mr. Holden Chow.
Thank you, Chairman. My question is on the WVR arrangement. Of course, we want to welcome new and emerging and new economy companies to get listed in Hong Kong. But when we talk about new technology, well, sometimes new technologies may become old technologies. Technology develops in leaps and bounds, and companies may easily lose their advantages in new technologies. Once, if this is the case, will these companies continue to enjoy the WVR arrangement if their technologies become outdated? And also, would you be trying doing something to prevent companies by saying doing one thing but then saying another? Well, maybe some companies get listed under the WVR structure, but then as time goes by, the companies might diversify their businesses and do other sorts of things. So under that condition, will they still be able to be entitled to WVR structure? And also, in the paper, you said that we would be looking at the high growth track records of the companies. So what kind of period are you talking about? So what is the high growth period that you have particularly in mind, the period concerned? And also, now we don't have a class action of mechanism for the investors. So under the present legislative mechanism, if small shareholders have to take the major shareholders to court under the WVR structure, will the government consider enhancing the mechanism so that the small shareholders will be provided adequate support, maybe a dedicated fund for litigation for the small holders should be set up to help small shareholders to take the WVR beneficiaries to court? All right, 4 questions there. Who will take those 4 questions, please? Mr. Elder.
Okay. About class actions. I think, I mean, the first thing I'd say is that the class action debate has been pretty long-standing in Hong Kong, and I understand that that is under the wing of the government and the Department of Justice. So just looking at this not from that angle or from the perspective of that debate more broadly, just here, I think I don't really myself see a major distinction as between a company that would have WVR and other companies that may be acting in a way that is prejudicial to shareholders. In fact, I don't think there's necessarily a correlation between the two. And what we see in the US is that class actions tend to be about disclosure issues rather than abuse of weighted voting rights in this sort of company. So my view is that really, if there is going to be a debate about class actions in Hong Kong for shareholders in listed companies, it needs to be a broader debate around the availability of class actions in all circumstances, not just WVR.
Mr. Lee.
Thank you. If I can just add, it is important to note that when we talk about WVR holders' rights, we're not talking about their economic entitlement to the benefits of the company. Their economic interests stay the same as the actual ownership of the company. When we talk about WVR, we're simply giving them ability to control the destiny of the company in light of the, the vision, the leadership, and the business model that they have created, the value they have created to shareholders. So I think it is important to know that we're not giving them anything, economically beneficial, other than giving them the ability to continue to manage the company for the benefit of the shareholders. So that's something that it is very important for us to make sure to differentiate. Number two, while we all agree that if we have the ability to continue to challenge the company on whether they are new economy, whether their leadership is still appropriate, we also need to balance that desire against keeping our corporate sector stable. You cannot have a company with publicly listed shareholders to actually be subject to that sort of uncertainty that at some point in the future, regulator can come back in again, change the way the company operates, the company manages, the company governs. So I think stability, predictability, and rule of law is something that is very important. So while it is great if we could have some of those implemented practicality-wise, as Ashley talked about earlier, it is very difficult and almost impractical for us to continue to maintain that ongoing requirement. Thank you.
The next one, Mr. Charles Mock.
Please turn on his microphone.
You seem to be very confident and excited about the new board from your introduction. But I have to tell you that for the local new economy companies, I think they're quite disappointed. Because right now, essentially, you're telling them that for pre-profit, pre-revenue new economy company, you have to be a unicorn and you have to be in biotech in order to be in the party, to be in your game. We hoped that your reform initially would be able to help the local development of the innovation technology companies, startups, and so on. Now it's not to be. In the consultation, there was this new board concept, and you would allow smaller players, pre-revenue or pre-profit companies, and not just biotech, to be included. But now it's not the case. And I still remember when I was in Cyberport and Science Park, we had a couple of big gatherings of company startups, and most of them, actually more than 90% of them, were not biotech companies, and they were very excited. And the Hong Kong Exchange, your representatives and I, we were on the panel, and we discussed the pros and cons and what needs to be done. I think the bottom line that they want to see is to increase the fundraising channels that are available to Hong Kong startups. But unfortunately, I mean, ever since the disappointment or the failure of the GEM board, we just never have anything like that that is available for Hong Kong companies, for local startups. This reform may help your underwriters and the exchange to get more business, but for the new economy companies, I think. Well, unless they're in biotech, otherwise they will just continue to have to wait for the next chance. You said that you were at the finishing line, but I think they are still at the starting line, unfortunately. It seems that the whole reform, you're trying to establish weighted voting rights. But for the new economy companies, actually, that's not the most important thing that they worried about. Actually, what they want to see is an additional funding avenue for them that is available. Now, back to the issue about weighted voting right issue. and protecting investors. I think some of the colleagues also talked about the possible safeguards such as class action, sunset clauses, which sunset clause I believe Singapore is also trying to establish. And they also said that they will probably forbidden companies that are already listed to spin off companies to using WVR. And also, I've been noticing that internationally, even in the U.S., there seems to be quite a bit of backlash against companies with large-scale WVRs. And it seems to be that some of these companies got into real serious alleged governance issues, and there seems to be some backlash in the U.S. as well. So I'm just wondering whether or not this initiative right now, without sufficient safeguards, is only going to be designed for some of these large mainland companies to try to spin off their companies and try to list them in Hong Kong, for one thing. And also that's not for the biotech because they're pre-revenue, but at least for the pre-profit ones, the WVR, your Chapter 2, whether or not this is like designed for some of the large mainland companies to do that in Hong Kong. And if that's the case, other than helping the exchange and the local underwriters, is it really going to help Hong Kong to establish ourselves as an innovation technology center?
Who's got it? Mr. Lee first.
Thank you very much, Mr. Mark. I'm absolutely in agreement with you in terms of all intentions to help small companies, early stage companies. In fact, the whole consultation process, as you correctly pointed out, started that way with the New World Pro, because we wanted to lower the hurdles. We want to make sure startup companies can access capital market much earlier. So we start that process of that consultation. But we all know that our market is different from an institutional market like the U.S. So we have a lot of retail investors. So the idea then is that if we have small companies, then those companies really can't afford very heavy-hand regulatory vetting, which by definition means that if we really want them to access the market, you cannot really have a heavy touch. So therefore, we propose to see whether light touch works. But if you have light touch, then it's really unfair to get the retail investors to be in that sector because there's much higher risk in that sector. So we said, okay, light touch means that no retail, it's a professional board. So we went through the consultation process. There's just simply no market support, for that board, new board, because people just think it's too risky and it's probably too early. So in the end, we decided for biotech that there is a very clear case to be made for pre-revenue companies, because those are very good, solid companies once they finish first and second phase of clinical trial. So I think it is in that area that we feel that with the drug regulatory systems there, that we are able to achieve the level of comfort that is needed for us to be able to bring that early stage to our market. So in the end, we all want to do different things. We want a lot of companies to come. We want early companies to come. We want big companies to come. But at the end of the day, we need to strike the right balance. This is not about the exchanges. This is not about the brokerage firms. This is about striking the right balance in this whole market between getting as many companies, innovative companies, to the market so our investor can participate in them, but at the same time, stop short of creating a space where investors, particularly our retail investors, are simply not able to be equipped to handle the risk in some of those early start companies. But I think our reform still help those early start companies, because with the greater access that is being provided for the company, VCs, private equities will have a lot more incentive to fund startups from Hong Kong, because they know that once they fund the first couple of rounds, then those companies will be able to access the market through a new regime. Thank you.
Next, our Deputy Chairman, Zhang Wafeng, Yuan.
Mr. Christopher Zhang, I would like to declare that I hold shares of Hong Kong EX. Innovation and technology is the locomotive of international economy. We want to develop new economies That's why I strongly support expediting this reform. Last year, the Hong Kong EX conducted the first consultation on the 23rd of March. There was the second round of consultation. So I want to ask how many submissions you have received, what is the general view from the market, and what are the concerns in relation to WVR. A lot of people are concerned about investor protection. Well, when it's a business, there is some kind of risk. You can't 100% protect investors, because if you want to do that, you will lose your competitiveness. Don't just impose laws prohibiting companies to do this and that just in order to protect investors. As long as there is risk disclosure, as long as investors know about the product, then they protect themselves. They can't be completely ignorant, just relying on laws to protect them. So I think protection of investors should start with investor education. And when it comes to listing committee vetting listing applications, there should be vigorous scrutiny and to verify information in the disclosure stage. And we also have regulation from the SFC, and they have acted very swiftly. We don't have a class action. I have read the SFO Section 213. The SFC can use the SFO to compensate or to reinstate investors. This is a very important provision to make sure that companies will not do whatever they want. This is a protection to investors. With keen competition, we have to implement WVR as soon as possible. The second question. Shenzhen Exchange. When it comes to WVR structure, it seems that they are faster than we are. When it comes to companies going back to the mainland to list, can they be listed at the same time in Hong Kong when they are listed in Shenzhen or Shanghai? Well, are there any ways to protect investors? Well, are there any regulations as to what is not allowed to have secondary listing? So this will help with the development of WVR structure. I hope the Hong Kong EX will do more. Have they talked to entrepreneurs, to the listing committees to enhance our competition?
So Graham, you'll be the first one to go.
Yes, thank you. Yes, we've received over 280 responses to the consultation exercise, so that's a good number of responses across a very broad range of respondents. Obviously, the consultation period only ended some 10 days ago, so we are still in the process of analysing those responses in terms of any issues that they raise. But I think it's fair to say from the analysis that is ongoing at the moment, but from what we've done, there is very broad support for what we have put forward. So I think it's a case of looking through to see whether there are some enhancements or some clarifications that we need to make in certain areas. But I think it comes from what I've seen so far. We have broad support.
Mr. Lee.
Question. Clearly, domestic regulators are moving very fast. Over the weekend, all those new rules, this is broader principles of rules have been announced. We are still yet to see detailed rules to be promulgated. I think, we anticipate that they will come reasonably soon as well. And then we will study their impact in greater detail. But it is very, clear that what they did is to remove their existing barriers that do not allow foreign companies or VIE structures or WVR companies or pre-profit company to list. So they simply remove those barriers from their existing rules today. Then, obviously, people who wanted to list in China, who in the past are not able to, today will be able to do so. But that doesn't mean that they may or may not want to do a secondary listing in Hong Kong, because A&H has been with us for more than 10 years now. Almost every major company in China that are listed in China are listed here, and vice versa. So we see no reason why not similar things will also happen in this space, number one. Number two, because many of the companies that are now permitted to list in China are foreign incorporated, so therefore they are only potentially considering CDR. When you consider CDR, the underlying shares, by definition, will need to be or can be easily or should be listed in a primary listing of its underlying shares. So therefore, it is pretty clear that for the for the CDR company listed, the IPOs, they will probably absolutely choose an international listing venue, and we will be their primary choice. For companies already listed in the US or UK want to come back with a CDR, they may or may not necessarily consider a Hong Kong listing right away, but over time, particularly if the CDR and their underlying shares in New York, you needed some mechanism of transferability or fungibility or price impact. A Hong Kong listing make a lot of sense. So we are having a lot of conversation with issuers. We are having good conversation with our exchange partners in Shanghai, Shenzhen, and also with the CSRC. We believe there are going to be some competition, but a lot more is, collaboration, complementary, nature. So I'm very confident that together, this pie is so much bigger and is growing so much faster that Hong Kong is going to be a net beneficiary of this overall development, no matter how we look at it. Thank you.
Okay, Mr. Elder, you got something to add?
I'm just on that. Although it's early days, just echoing Charles's point, there will be undoubtedly going forwards far more variety as far as and choice of investments in Hong Kong as well as in the mainland. And so the extent to which that then factors into our cross-border or cross-boundary arrangements through Stock Connect or otherwise also effectively grows the pie for both of us. And it's a really, really important point. So I hesitate you use the phrase win-win usually, but you can see that actually what is available for cross-boundary trading is likely to expand overall. Over time. Just one point, I think there was a second question around disclosure as well, which I think really there is that, yes, we are fundamentally a disclosure market, but with some significant, in my view, appropriate caveats. And you can see that in the public response to proposals about WVR, including to the consultations, there was a very, very clear view that yes, we need to go ahead with this, not least because of the competitive challenge posed by the US, but on the other hand, we need to design a system that has appropriate safeguards for shareholders, and also safeguards around making sure that WVR doesn't become widespread and is sort of allocated to companies that effectively don't deserve it, because they don't have the kind of founder history, etc. So there was a very, very clear direction around, or steer from the market around safeguards.
Okay, thank you. I just want to ascertain whether any members want to ask the first round of question. Who have no? Okay. 下一個問胡志偉議員第一輪。
Mr. Wu Chiwai, first round, please. I would like to hear an explanation from you on this. On the main board, there was this. There was a chapter on biotech companies which concentrate in R&D. Well, if they are not biotech companies, but they still focus on R&D, does it mean that these companies will not be entitled to this WVR arrangement? If that is the case, say, in the future, maybe companies with innovative technologies would like to be covered WVR structure. Is there a mechanism for them to get WVR? For example, some companies may engage in AI, artificial intelligence. They would like to enjoy WVR. Is there a mechanism for them to do so? How is it going to be like for them? Second, in the chapter on WVR, you said that you would like to attract high growth or innovative companies. Now, if it is a biotech, the minimum capital is $1.5 million, but for WVR companies, we're talking about $10 billion in US dollar as a minimum market capitalization. So if we are talking about biotech companies engaging in R&D mainly, well, if their market capitalization doesn't reach 10 billion, does it mean that they will not be entitled to WVR structure? And for WVR, have you considered whether there will be the possibility that there is associated companies abusing the mechanism, associated companies of the WVR companies abusing the system? Now, we talk about $1.5 billion or $10 billion in market capitalization. How did you come up with that kind of level? I mean, does it have to be, say, all the money has to be put in the local market, or if it is a foreign company, the R&D is taking place in other countries, but then it is getting listed in Hong Kong. So my question is, can Hong Kong benefit from some direct investment from these companies? Mr. Lee? Hi.
Thank you very much. I think we need to differentiate WVR vis-a-vis biotech. Biotech is there to solve one different problem. We used to, before this reform, require a company to at least have revenues, meaning you have to sell your product and make some money coming out, not profit but revenues. But in biotech space, because it's R&D, because you're still doing clinical trials, you are not allowed by drug regulators to sell anything. So therefore, by definition, biotech, life science, pharmaceutical companies in this early stage do not have revenue, period. So therefore, but they do have distinctive value. The U.S. market has been extraordinarily successful attracting them there, and huge value has been created. Obviously, some drugs don't get approved, and then obviously the company may be worthless. So it is in the revenue side that we have created a biotech sector for those companies, because we want those companies to be able to access to capital, because they need a lot of capital during the clinical trial period before they are able to have any revenue. So there we settled on 1.5 billion by looking at a variety of global studies to look at where we need to, because if you wait for too late, put the hurdle too high, they really don't need the money anymore. The drug is already there. They can sell to a big pharmaceutical company. But if it's too early, then it's highly too risky. So we find, but if you have a too lower hurdle, liquidity is an issue. So we combine, looking at a variety of factors, we have arrived at 1.5 billion as the most optimal point between risk, liquidity, and also stages of the development of that company. So that's for biotech. But for weighted voting right, it's a different issue. We think weighted voting right give those founders a disproportional power relative to the money they put into the company. So we think inherently we want to make sure that those people who are giving that power indeed are really good people, visionary people. How do we find out? Then we force them to grow fast, to grow bigger. They have to demonstrate they can grow their company to a $10 billion company at least with that structure. By definition, they have to have a lot of smart investors, VCs, private equity, to invest in them first. So those rounds of negotiations and investment with sophisticated investors before they come to our public market is very important for us. So typically the reason we wanted to have 10 billion is that we force them to go through this. Because they don't have to have weighted voting right if they really want to reach capital market earlier. They can use our regular board. Our main board actually does not have that kind of a market cap. We're simply saying, if you have weighted voting right, please prove to us that you are able to run this company into a very large scale, and then we can potentially consider our public money to allow you to have that weighted voting right. So biotech, we actually said it's too small and it's too risky, and we really don't want you to have weighted voting right yet. So that's really is the balance that we have struck. And any other comments and supplementaries is welcome. Thank you.
Thank you. 而家手頭上有兩位同事。
Two other members would like to ask a second round, Mr. Charles Mok and Mr. Holden Chow. Any other members wishing to ask a second round of questions? Before I allow the two members to ask, I have a question myself.
I heard about that, yeah, for company with weighted voting rights structures, because you're trying to reward the founder because of his vision, his effort, his imagination, and all the intellectual property vested in him. But as Chen Zhenying has said, I mean, a few years down the road, I mean, this founder may have, slackened, may have become lazy, and the company may perform not that well. And of course, I've heard about Mr. Elder's reply just then, saying that it is very difficult to give them a kind of continuous assessment. And so we're obviously relying on the natural sunset clause, because the founder may just quit the company and go, and that's weighted voting right, structure will just fade away. But how about, this founder become a very lazy guy and not doing anything, but still hang on to his position after 10 years. So what are you going to do with this? Because not without a sunset clause, meaning that, for example, every 10 years, every 15 years, you got to give the independent shareholders a chance to say whether the company is in good condition. I'm not talking about every 3 or 4 years, because we're talking a longer time span. And of course, I heard that if we are going to introduce a sunset clause requirement, that would, scare some of the companies away. But how about a longer, sunset clause period, say every 10 years, 15 years, all these independent shareholders got to vote whether, that, voting structure should be still in place. And it is a fair, kind of mechanism. Thank you. Mr. Elder.
Yeah, it's a really good question, because this question of sunset clause, I think, has been around for some time. If you look at a few things. Firstly, I think that the exchange has come to a view, and I think we have as well, that having a sunset clause defined in regulation, which is time limited, would be a significant disincentive when firms are making the choices between Hong Kong and the US. And the reason for that is that the US doesn't have a mandated sunset clause. And in fact, the US don't have any rules about weighted voting rights at all. It's purely market driven. Now, the second point is that given that it is market driven, there is no prohibition against a company adopting a sunset clause. And it may be the case when a company is coming to market and it's in discussion with its financial advisors and potential institutional investors that is what it decides to do, because that is the only mechanism that exists in the United States around sunsets. Third thing I'd say is that and I won't dwell on the natural sunset clause because I think that's clear. It's basically about leaving the company or stepping down as a director, transferring your shares, or basically go through through your lifetime. But the final point is that there are other ways in which shareholders can express dissatisfaction with companies. And I think the reality is that you look at many of the corporate stories, at least the more depressing stories around companies, either with weighted voting rights or not, you'll find that one of the reasons why the founders ultimately step down is because investors have made their views very, very clear, not necessarily through a formal vote, but simply through their interaction with the companies and the way in which they are expressing those views in the media, through research reports, etc. Yeah, and then, as Charles says, in the price. So I think it's a bit more of a subtle issue than is presented.
Yeah. Okay. 第二輪嘅有莫乃光議員、周浩鼎議員同埋我自己都排咗嘅，咁我都。
Second round is Charles Mok, Holden Chow, and I myself. I will exercise discretion to extend this meeting to not beyond 1 o'clock. Mr. Charles Mok?
Yes, Mr. Lee, you said that the difference between the Hong Kong and the U.S. market is that we have a lot of retail investors, right? And I'm not sure about the real breakdown between Hong Kong and U.S. in that regard, but at least for the U.S., their retail investors probably got trained with, investing more in the higher risk companies with NASDAQ and so on many years ago. So you got to start somewhere, right? And you also said that for the professional investors, in your consultation, you didn't get a lot of market support. Now, I would understand that, but sorry. You also said that this current reform will help the PE companies and so on to get more interested and more experience with the new economy companies and so on. Now, having said, even with that, will you possibly consider in future that you would possibly lower the market cap and the revenue requirements in a few years if you would do further consultation as a possible way of attracting more companies to be listed either in your Chapter 1 example or Chapter 2 example, and of course expanding that to other sort of scope other than biotech. Because even though you said biotech, you're really talking about pharma. You're talking about pharmaceutical mainly. For most of the companies in Hong Kong that are doing biotech in science parks and so on, actually they're not pharmaceutical companies. They might be, they could be classified as electronics, biotech types of companies, and I don't believe that they would be able to qualify under your situation, your requirements, and obviously, the scope of biotech is, or pharmaceutical actually isn't even within the Hong Kong government's, their goals or their, the four main technology areas that they're trying to focus in, like AI and aging, smart city, and so on. So, would you consider expanding or the scope and lowering the requirements on revenue and market cap in future in order to make it more inclusive? If not in this round, but at least you can tell the market, you can tell these companies that this is the direction that you are going to go into.
Mr. Lee?
Thank you very much, Chairman. Yes, I think the direction of travel is clearly to find ways to continue to improve our regime so that we become more accommodating and trying to really get more startups and creating an ecosystem in Hong Kong for us to do this. I think yes, you're right. There are a lot of companies like AI and other areas where we absolutely wanted to encourage to develop in Hong Kong. I think the reason we choose biotech or life science or pharma, depending on how you look at it, we actually have other sectors that can be included in this whole chapter, is really this challenge between no revenue, then how do we get some level of comfort that this company will be successful in the app, because revenue, you know, it's already selling a product and people are buying it. If there is not really doing that, how can we do so? So pharmaceutical is easy because we have drug regulation. So we are using the same principle, trying to see whether in areas where there are other objective, third-party, authoritative agencies or standards or benchmarks that allow us to say that if you comply with that particular benchmark, then we consider you to be at a certain level of your development that you're no longer as risky as otherwise. So even in the biotech sector, we are not just only settled on FDA, CFDA, or EMA. We are also looking at other potential third-party benchmarks that allow us to develop a comfort. The key there is to, in the absence of revenue, how do we get comfortable a company has passed that critical mass of risk so that the public investors can participate in that? But if you're not in a space where you don't have revenue, like AI, many other sectors, even though they are great sectors we want to encourage, but they are able to sell the product. So I think if they are able to sell their products, are able to generate revenue, I think we should go back to our existing rules on profit or other things rather than on revenue, because if they are able to sell revenue, at least they should sell some revenue to demonstrate that their product is indeed wanted and bought in the marketplace. Give us, all of this is trying to find a proxy for us to understand the risk so that we are able to present to the market companies that is the right balance between risk and investment.
Well, Chairman, I just have one quick comment because listening to what Mr. Lee said, basically that means there's still a big gap for those companies that are in those markets that are not as regulated, or you have that kind of a benchmark like the pharmaceutical field, but they are like AI, or even if you look at Facebook, Google's, those companies in the past or currently, you know, when they got listed, obviously there's no such benchmark, and they weren't making a lot of money at the time they were listed in the U.S. So you still have that gap of those types of companies that you will not be able to address, and that's what I'm talking about.
Yeah.
Any comment?
Yeah, I think we need to make a differentiation between profit and revenue. We actually, Google or Facebook and many other companies, they actually, even if they don't, or Amazon, in this massive company, probably even a few years ago, don't even make any profit, but they make massive amount of revenue, because revenue is where you sell product. We're talking about revenue here. We're not talking about profit. Even today, in our main board, we allow companies that is not yet make a profit to list.
Yeah,
as
I
long
know,
as
but I
big.
think, when Google or Facebook listed, I don't think they were making a lot of revenue either, even at that stage.
I do think they make enough revenue.
They're making some revenue, probably, but yeah.
Okay, I think we'll give the chance to Mr. Holden Chow.
好，唔該主席，咁就係追問問題嚟嘅。第一樣都係。
It's a supplementary question. First, about WVR structures. I asked a question previously that you have to look at the high growth business record. Can you tell me over how many years? Because when it comes to the chapter on biotech, you said 2 years. So when it comes to WVR, will you only look at 2 years of business record? The second question is about WVR beneficiaries. If they breach your rules, there will be sanctions. You mentioned in the paper that the WVR beneficiaries breaching rules or committing misconduct, if you impose a sanction on the entire company or other shareholders, it is not fair. And you said in the paper that you would focus on the beneficiaries and impose sanction on that individual. So what are these sanctions? Is it to take away the WVR, or to kick him out of the board, or to stop him from making decisions? Something targeting the individual?
Yeah.
Yes, thank you for the question. In relation to the track record requirement, that would be a 3-year track record requirement for
3 years, yeah?
3 years.
Okay.
That is the
okay.
main board requirement. So the requirement for the biotech is a concessionary regime. In relation to the WVR beneficiaries, if they breach the listing rules, then they will be subject to all sanctions under the listing rules. So there could be circumstances where under the listing rules, because of the nature of the breach, we would deem them not suitable to be directors of the company. And if they weren't entitled to be directors of the company, they'd no longer be able to hold the WVR holders. We've also enhanced the provision. We've required an undertaking to be given to the issuer by the WVR beneficiaries, which would also be available to third-party beneficiaries, to investors in the company. So that would create the benefit of a potential legal basis for action in relation to the WVR holders. So we have enhanced the regime in relation to that.
Okay.
Okay. Chen Zhenying 議員
Mr. Ronick Chen, you have the second round. I'll let you ask first. Last week, in the Electrical Council, I asked the question of the Secretary of FST. For companies with WVR structures, we have to ensure that the governance of the company meet a certain standard. I remember Mr. Lau, the Secretary, said that there will be dedicated training courses for INEDs of these companies. So I would like to ask the Exchange and the SFC. For these companies, they are allowed a different voting structure. So how do you ensure the interest of investors? That is, you do it by maintaining good governance. For INEDs monitor the governance of the company on behalf of minority shareholders. Will you give them support to let them know what they're supposed to do in order to protect minority shareholders?
Yes.
Thank you.
Thank you for the question. And firstly, let me be clear. We have enhanced the corporate governance requirements in relation to INED. So we have required the mandatory establishment of a corporate governance committee for these types of companies. So we've already, I think, put front and center the role of the INED. And the INEDs are all to be appointed on a one share, one vote basis in relation to these companies. So fundamentally, we've set up the building blocks, and we require disclosure and transparency on an annual basis or an interim basis in relation to how that is being held. We currently don't have specific training requirements set out in our listing rules for particular INEDs. I think we feel that that possibly will end up being a sort of tick box exercise. But we do require INEDs, when they take up this role, to be appropriate for the job that they are being asked to do. So I don't envisage, I think, from an exchange perspective, that we will set out very specific training courses, though we will expect the INEDs at the get-go to understand what their obligations are, specifically in relation to WVR.
Thank you. Next, we have our Deputy Chairman, Zhang Wafeng.
I only have a very simple question for Mr. Charles Lee. When will you accept applications for WVR or biotech to list?
The next step is for the rules to be, for the consultation conclusion to be published, and with accompanied with that are the rules. Currently, we are looking at end of this month, and if that is on schedule, as soon as the rules are publicized, public, we will be able to take applications.
But there are lots of controversies in the market, especially when it comes to WVR structures without class action. Will you, for this reason, delay the timetable?
My boss is here.
Who is your boss? Mr. Elder?
Yes.
Okay, Mr. Elder.
Present purposes, anyway. Sorry, was the question, I didn't quite catch it, was would you delay because class action is not available? Yeah, I think
I think that's the gist of the question,
yeah,
because
I think
the response are quite, diversified in regarding the class action issue, right?
Yeah.
I presume this is what Mr. Jones is asking.
Yeah, okay. Well, look, I think in relation to, class actions are seen to be a differentiator between Hong Kong and the US. And that's why the subject has arisen. The class action debate, from my perspective, is it's relevant to the extent, obviously, if class actions are introduced, it does give shareholders fundamentally greater power to take on cases or be joined into cases involving corporates. As I said earlier, I think the issue with class actions is it does fall under the wing of the government and the DOJ to decide how to take that forward, as distinct from us. And the crucial point is that when we've been looking at the shape and design of WVR this time round, we have assumed that there will be no class actions available in Hong Kong. And therefore, we have to make a judgment as to whether or not the safeguards that are now proposed are adequate, knowing that there is no class action regime in place. So that means that we would expect, subject to reviewing the final responses to the current consultation, that the regime could go ahead without a class action regime. Yeah.
Okay, my turn to ask a few more questions. First of all, I think I have a view on the governance issue because, as Mr. Graham has mentioned, the INED will be voted in by one share, one vote under the new regime. But are there any plans to increase the number of INED on the board of these companies with weighted voting rights, and would there be any mandatory expansion of the power of INED on these companies as well under your new regime? This is my first set of questions. My second set of questions would probably go to the government, although I must recognize that the class action is not a condition precedent for the introduction of the new listing regime. And I understand that after Anthony Neal's report dated May 2012 on class action, the government is looking into ways of, putting together a kind of action plan to try to implement class action in one form or another, beginning with perhaps class action to protect consumer rights, because I've read in the recommendation of this report saying that the proposed class action regime should cover tortious and contractual claims made by consumers in relation to goods, services, and immovable property. Now, after the consumer protection is done, perhaps, that the regime could, after a few successful years, be expanded to cover investor protection. I'm just asking the government what are the plans regarding this. And my third question would be related to the second question as well, because if I'm saying if there were class action and if there were plans to extend to cover investor protection, I would ask formally now that the stock exchange as a stakeholder in this whole process, can you make a guarantee or undertaking not to oppose the imposition of such a regime in the future? Although I know it's a very difficult question, but I need an answer. So there are three questions. Thank you.
Maybe I could take the first question. We obviously considered what the right number of INEDs was in relation to the WVR regime and whether we should increase it. I think our view remains that the requirements we currently have for a third of INEDs on the board is the right number. Mm-hmm. So we have no immediate plans to look to change that. Mm-hmm. In terms of your second question, or the second bit of the first question about the mandatory expansion of responsibilities, as I explained in my answer to the other learned member, is we are setting up and requiring a mandatory corporate governance committee, mm-hmm. which will have very, very specific responsibilities by the INEDs in relation to the WVR regime. So I think we have enhanced the responsibilities of INEDs. It's obviously very difficult for us to change the legal responsibilities of INEDs mm-hmm. through an exchange rule, but I think we have certainly increased their responsibility and their disclosure requirements in what's happening in the WVR regime.
Okay.
Mr. Chairman, on class action in general. As you have pointed out, ever since the Law Reform Commission published its report on class action, there is a working group being set up within DOJ to look at the issues. Class action is a very complicated issue. So the working group, as far as we know, they have held more than 20 meetings. They're looking at various issues. Just as recommended in the Law Reform Commission report, it's going to be a gradual and incremental approach. So its focus right now is on consumer rights cases. So that's a start. But even for that start, the working group is still working on its proposals, and after that, it will submit its recommendations to the government, and that will be the next step. So right now, the focus of DOJ's work is on how can they take forward the Law Reform Commission's report as the start is on the consumer rights cases. So for this moment, as for the government, we have no plan to look at issues beyond consumer rights cases at this moment. So this is the response from the government right now on class action.
Sorry, can I make a follow-up? I mean, under the present representative proceedings, mechanism, there's a form of representative action could be taken by shareholders. But before you implement your class action, which may be in 5-10 years' time, I don't know, would you be considering setting up a fund to fund, litigations under the representative proceedings mechanism? Is there any plan to do so?
As far as I know from my position from the FSTB, we have no information or there's no plan from within the government to set up a fund for the matters you just referred to.
I see. Maybe I should ask the secretary himself. Mr. Lee, you still lack an answer.
I think Mr. Elder.
Mr. Elder as well.
Yeah, sorry. Just on this, I think clearly Charles will not have to say yes or no anytime soon for real. I don't think. Doesn't sound like. I think in any event, just from our perspective on class actions, the essential issues are. On the one hand, now I'm thinking about corporates and shareholders, personally. On the one hand, there is undoubtedly a massive litigation cost disincentive to shareholders bringing suits against companies and directors. There's no doubt about that. And one of the side effects of that is that a lot tends to rest on the SFC bringing actions, including, I think it was mentioned earlier on, under Section 213, in order to try to get compensation to those who have been harmed by misconduct. But of course, neither we nor the SEC or nor our other counterparts overseas, any of us are capable of bringing all of the actions that might be meritorious, because we have resources constraints and we have priorities around what to take. So, on the other hand, the issue with class actions in the US is the question of contingency fees and how they may or may not work in the public interest, and the degree to which class actions ultimately result in a large number of litigious proceedings, but also pressure leading to a large number of settlements. So I think it is quite a complicated issue. All I'd say is that from where I sit at the moment, there is a gap, which is to do with the fact that shareholders, particularly ordinary shareholders, as it were, or retail shareholders, would now find it quite difficult to fund their ability to bring suits in court.
Okay.
And that's basically why the SFC focuses so hard on corporate misconduct, because we try to ensure that we do enough to deter and detect. And that's why we've been ramping that up over the last, 18 months, 2 years or so, as an activity here.
Okay, thank you. That's why I asked about the funding issue, which I think I will ask the secretary from the Bureau himself. Any members got any more questions on this item? If not, thank you very much, gentlemen, ladies, and for your presence and presentation. Thank you very much.